do, let's start so we can have some time for the questions. I'm Kaan. If we haven't met before, I'm one of the partners at Tenity, and I will talk about Tenity a little bit in a minute, but I just want to start in terms of like what we are going to have. We have a great panel today. Our partners from Launch Africa, Uwem is going to join us. We'll also have from Boost Africa, David is with us, and also from OPUS Network, Olamide is with us. So we have three people who knows Africa quite well, at least much better than I do. So I will do my best to moderate it and maybe give you some tips and tricks and maybe some kind of like the next steps if you're a founder. And this is going to be our topic. But before like moving forward, again, we do have our questions. I have my own curious points as well. If you have any questions, whenever you have it, feel free to write it on the Q&A. And I will do my best to ask it. So you don't really need to wait for the last session, Q&A session. So if you are all good, I also want to introduce you to Eda. Eda is one of the architects of this series. As Tenity, we've been doing it quite well. Hi, Eda. Nice to have you here. And maybe I can also have your next slide as well. Would you like to introduce yourself to our audience?
Yeah, sure. Hi, everyone, and welcome. Great to see many of you joining us today. Very quick introduction. I'm Eda. I'm a part of Tenity team, where I work closely with startups, corporate, and ecosystem partners on our innovation and international growth projects. A big part of my role is helping companies and startups navigate new markets and in a practical way. That's actually the reason that we wanted to launch the webinar series, Tenity Global Market Access series. So because we keep seeing the same challenge again and again, startups and corporates trying to access new markets, go internationally, but there's often a big gap between the interest and execution. So we thought that we should bring people with has on the ground insights. They can tell about like how the partnership works, how pilots can actually get done, how ecosystems really function in practice. We wanted to start with Africa because it's one of the fastest growing innovation markets globally, and with strong momentum in fintech, payments, lending, and digital infrastructure. So that's why we wanted to start with Africa. Very intentionally, but we have a number of others in upcoming months. As you could see here, we're gonna talk about Dubai and wider MENA region. We will do Central Asia and of course the UK. Yeah, with that, I think we can get into today's discussion. Great to meet you all and looking forward for your questions. Over to you, Kaan.
Thank you. Thank you, Eda. I mean, as Eda mentioned, maybe for some of you who haven't heard about Tenity, it might be a good idea to talk a little bit about us. As Tenity, we've been investing in early stage fintech in Europe and Asia Pacific. We are a company of like closer to 11 years of history and legacy. And our hubs, we do have few hubs. Our HQ is in Zurich. I am based in London. Eda is based in London, so UK market access is always fun for us. We have our like Madrid office. We have Tallinn, Istanbul, and Singapore. So these offices serve even larger markets. So we like to see those kind of cross-pollination overall. And then in Tenity, we have our investment arm, which we invested in 292 companies, and asset under management is roughly 140 million US dollars and growing. And also, we run a lot of programs, sometimes with corporations, sometimes with governments. So in those programs, we really like to see companies grow, maybe have like new clients and go beyond borders. So this is basically where we are kind of like striving. And the good thing is we have plenty of good global partners. I just wanted to add like a map of our like portfolio companies. Again, when we are investing, especially, it's always financial industry. So it might be like Web3, AL, ML, payments, lending. There are plenty of things. And again, we invested, I think, over like 50 countries, which is going to be relevant for Africa, because Africa is also quite fragmented. And in terms of like the corporate partners that we have UBS 6 and Ripple also there in our like fund. But also we've been running like programs with Visas, Allianz, HSBC, XRPL, Kirok, KB, and plenty other financial institutions and governments all around the world. So the good thing is when we are running programs, we tend to have like a lot of great people or familiar faces that we can bring and help our startups. So we actually have two guests. I think maybe Lina is. Let me just start with David. David, can I have you? If you are hearing us, you can join us. David Van Dijk, team lead Boost Africa. Hi, David. Nice to have you.
Hey, thanks for no, thanks for having me on the show, and I'm looking forward to an interesting conversation. Thank you so much.
Perfect. We will have Uwem from Head of Investments, Launch Africa. He was traveling, so we wanted to make sure that we are covered with Launch Africa. That's why we also had Lina online. But Uwem, if you are hearing me, feel free to join whenever you would like to join.
Oh, thank you for having me, and I'm looking forward to all the conversations and the insights that we will share today.
Okay, perfect. Now your video is coming along. Great to have you. And finally, Olamide, uh, another of our good friends from UK, Head of Investment Ecosystem at OPUS. Hi,
Hi.
Olamide. Nice to have you.
Hey, Kaan. Thanks for having me. Looking forward to the conversation today.
Perfect. Like again, our conversations generally is quite authentic. I mean, basically, we would like to have different aspects of ecosystem, and we want to talk. So, if everybody's well done, introduced by themselves, let me just share this. Sorry, like stop the screen sharing so we can actually see our guests much better than we do. So what I'm thinking is like maybe Uwem, we can start with you just a little bit in terms of like the investment because when we are thinking about Africa, there are plenty of companies, plenty of countries, and there are so many opportunities in different stages of tech. And since you've been also investing and Launch Africa is a predominant investor in the Africa region, maybe we should start with some numbers and how do you think about like the Africa overall? How do you say?
I mean, how do I think about Africa? Africa is the market that everybody should be looking
But
at. Mm.
I'm sorry, like I didn't ask you to introduce yourself, so maybe let's start with what one or two sentences, and
Sure,
then
sure. I was
we'll go
actually going to go into that. I was actually going to go into that.
Thank you.
So again, hello everyone. My name is Uwem. I'm the head of investment at Launch Africa Ventures. For those of you who don't know Launch Africa, we are probably Africa's most active investor over the last 3, 4 years. We are Pan-African in how we see the continent and how we invest. And our goal, again, is to invest in high potential founders that are building scalable businesses across the continent. Um, to the question of how do we see the continent, while Africa is a late bloomer in every sense of the word, there is a lot of potential. And the goal for us is how do we capture that potential and make it into some sort of value that is one, impactful, and two, returns our fund over, the space of the lifetime of the fund. So at Launch Africa, we are very, very interested in not just investing, we're interested in building the infrastructure for founder readiness or exit readiness. We are also creating and fine-tuning what an exit pathway will look like. And also we're honing in on, especially this 2026, actual unit economics. So it's not just about building the Uber for X or the AI for this. It's about helping the founders and working with them in that journey and helping them figuring out what the right business model is, who the right partners are, how to close their pilots, and ensuring that they are building a sustainable business that is based on fundamentals and not just the hype. Across our two funds, we have, give or take, around 160 plus companies.
Incredible.
One was 133 companies, and now we're in our fund two, raising our second fund, although we're raising about $50 million, but we already started investing and we have 30 plus great companies. And I probably will talk about our strategy if that question comes up later. I think I'll just pause here and pass the mic.
Perfect. No, because obviously we do know that emerging markets in Africa is one of the things, and as Tenity, as a person, I'm Turkish, so Turkey in some aspects are in emerging markets, depending on which angle you are looking for, and some of the markets that we also operate in are emerging markets, and to be honest, they are the most exciting ones. Like to build something and see that growth. And while just a little bit talking about this, David, should we continue with you? Would you be so kind to introduce yourself and
Sure.
a little bit maybe talk about Boost Africa as well? Because you are also helping to build that infrastructure in a way.
Right.
Yeah.
No, thanks. Thanks so much. Yes, let me also introduce myself a little bit further. So my name is David van Dijk, or David. I do a number of different things in the ecosystem, if you will. My day job the past years has been part of a program called Boost Africa, which is at its core, it's a fund of funds by the EIB, the European Investment Bank. So it invests in African VC funds that invest in tech and tech-enabled companies. My role in the program is I have a separate budget for what's called technical assistance. So we support the funds that receive capital and their portfolio companies in trying to do their work more efficiently and effectively, whereby a large part of these funds are first-time fund managers. Then as part of this program, we've been running a very great program at the Saïd Business School at the University of Oxford, which I've had the pleasure of starting to run this year moving forward. So we invite African VC fund managers to spend a week in Oxford, expose them to the latest thinking in VC management, but it's a lot about sort of peer-to-peer knowledge exchange. I invest myself as well as an angel by a group called Rallycap, which is sort of an angel collective on steroids, angels that then raised about 20 million in 2021. And I've been involved in other ways also mainly on the angel side. I run a program together with friends called the African Angel Academy, where we train obviously locally African angel investors. And over the years, I've worked with different sort of DFIs and organizations. So my work has largely been early stage investing and a bridge to sort of the DFI community, development finance institution community, if you will.
I mean, that's incredible. And obviously, funding is not the only problem that entrepreneurs are having, but definitely the cure for scaling and creating the economic impact. Because when you have great founders building stuff, you need great investors who can back them as early as possible. And in that case, you're both investing in the founders and also in the fund. So maybe we can discuss what's happening over there. And finally, Olamide, great to have you. Would you like to do a small introduction? And at Opus, you are also creating a community around African founders and also even more. So please go.
Of course, yeah. So I'm Olamide. I am head of investment ecosystem at OPUS, which is a global community for founders. We have headquarters in the UK, but we have offices based in UAE and South Africa as well. We are actively involved in the Big Four within Africa. Our close partners, Baobab Network, as well, work super close with us to make sure that we always have hands and are able to support our founders across Africa. We operate as a deconstructed accelerator. So our hypothesis is that one, founding a company is extremely hard. I mean, Elon Musk himself said it's like building a company is like eating glass and staring into the abyss. And so we believe that the most important thing in early stage is having a community. And so we built a community for founders that are able to interact with individuals that are very similar to them, both locally and internationally as well. So we have 8 principles or areas that we believe that founders could potentially come across any problems in. That can be anything from legal problems to go to market to marketing. And I lead on all things fundraising. So a little bit about me is I spent the last 5 years as a venture capital investor, most recently at Octopus Ventures, which is a global VC fund, that started in Europe, but we do investments globally. I've done 24 investments and sat on 12 boards. And so I continue to support founders to ensure that they are supported when it comes to all things fundraising and building their company overall.
Great. I'm sorry, I was a little bit distracted because the good thing is like our audience has also started to ask questions and also communicate with each other. It's really a pleasure to have you, Olamide, because I think like from investor perspective, it's a super different thing to understand like how Africa is going. Maybe, I mean, for me, I do have like few things that I want to discuss with you guys because I also mentioned like the market access angle to it. So some of the founders in Europe or like UAE or like rest of the world might be interested in going in the African markets. And maybe the more important one is like ambitious African founders building in Africa, but also going globally, which creates the most economic impact. So I want to go over there. But should we start? Because Uwem, you guys are investing in early stage pretty much like us. So when you look, I mean, like you've been doing this for a while now, and how do you see the biggest difference moving forward? Like how the African founders are changing over the time? What do you think is currently the problem, still the bottleneck maybe in the market?
It's interesting we're having this conversation now, and thank you for that question. I spent yesterday evening at a dinner with someone quite popular in the Nigerian and African ecosystem. His name is O. He was one of the first people that identified Paystack. For those of you that don't know, Paystack was one of Nigeria's first big exits. And we're talking about the evolution of the ecosystem from an investor perspective, even to the founder perspective, and how the and I'm going to say something here, everyone. I'm going to be very, very truthful. And if I step on toes, I mean, I just want to pass. Just bear with me because I'm trying to pass a message. And back to his point was that maybe having that big exit at that time in the ecosystem, it was good, it was great. But maybe he set the wrong precedent because everybody thought, oh, well, I can start a company and sell my company for 200 plus million. Guess what? It didn't really happen for many people. We're still struggling to get those exits. And what we've seen is while there was so much hype in the ecosystem, while there's still a lot of hype, so many things have changed. Macroeconomics has changed, geopolitics has, come in, so many things, so many variables are now introduced into that equation that we need to start approaching things quite differently from a founder and an investor and even an ecosystem perspective. 2026 for us at Launch Africa and for me, because I sort of drive the investment strategy at Launch Africa, it's going to be fundamentally different from 2021. We don't have the zero interest rate era, so we don't have free money or free cash lying around. However, on the positive side, a lot of infrastructure that didn't exist in that era, that 2021, 2022 era, that would have enabled us take hold or make use of the, that all that cash in the market now exists. So we're having, fiber optic cables being connected across the continent, even internally. We're having the Pan-African payment infrastructure that is going live with about 18 African banks so that they can transact internally. I don't have to, use SWIFT. Open banking is becoming a thing, even though from our estimations, it's still very late. Quite a number of things are happening. But and investors are now beginning to realize that there is a saturation arbitrage, meaning that while some markets, some sectors have a lot of focus, there are so many other sectors that we should be investing in and can invest in and get those kind of returns that we're looking for our LPs. Because again, liquidity is the name of the game. We've moved from, oh, let's just invest to, can this give me exit within the timeline of my fund? And we're in a scenario where people are going from their first to their second or second to their third fund. And now LPs are saying, where is my money? And so fundamentally, we have to start approaching things differently. So even if about 76% of all the funding goes into payments, lending, Nigeria, Kenya, taking most of that in terms of those verticals, then South Africa and Egypt, we're beginning to see 10x of opportunities in adjacent sectors, even within fintech. So you're talking about embedded finance, trade finance, because again, credit is very, very important to accelerate trade and movement. And we have a big financing gap. We're also seeing people actually build solutions on African data and build a verticalized application layer on top of that. And in short, if you look, if I get time to talk about our AI strategy, that's even how we are seeing how AI is going to evolve. So fundamentally, things have changed, and it's good to see that the ecosystem is staying in touch with the times to say we can still play the game the way the Silicon Valley folks are playing it, because it's two different markets and we need to do things way differently.
I mean, I cannot agree more, because I think this is kind of like the illusion. The rest of the world is kind of like trying to be Silicon Valleys by its own right, but it doesn't, because we don't really have the liquidity, we don't really have the investors, we don't have sometimes like the history. It's not about like being smart or not. It's just the reality of the markets. Great to know, and I'm happy that you mentioned the DPI, like the money returned to investors, because I'm also going to ask like David, like. I'm sure that there are a lot of like interests being like a first time investors, and you are also trying to help more people to invest in Africa, establishing this kind of infrastructures. Would you like to comment on the investment scene? Like, where do you
Sure.
see? Yeah.
Right. No, I'll add sort of two comments to the comments made by Uwem. So one is that sometimes when people talk about African countries, they talk about as if it's a different planet, right? It's not the case, right? There's many more similarities than there are differences. And just like technology is an enabler or has been an enabler in Turkey or in India or in, Denmark, it's the exact same for, for Africans and the African continent. And the second point I want to make is for everyone who finds this an interesting topic, there was a great article late last year called Early Not Broken by one of the well-recognized investors, a gentleman called Ido Sum. And he sort of, he put aside of an article about the ecosystem, and he said, listen, guys, it is still very early days. It's still a very nascent ecosystem. If you compare the data, so how many deals get done, how many deals move from pre-seed to seed to Series A, number of exits, the African ecosystem mirrors or resembles like the US in the 70s or 80s, or, Israel in the 80s, or Israel in the 90s, or India in the 2000s. So it is still a nascent ecosystem. And, and that means that there are no shortcuts to success, and you need to appreciate that and understand that. And that's the environment you will operate in.
Yeah. And in terms of like the investment, how do you see, like, do you see more emerging managers? Because like it is also like since it's a value chain, you need to have LPs, right? Like there are some LPs like yourselves, but how do you see it? Like, do you think that people are having an appetite, like in Africa, people who made money through like commerce and stuff? Because this is the biggest difference, I think, in the US and the rest of the world, I guess, right? There are plenty of people who kind of got rich either working or like building tech, even from like 70s. When you come to Europe, for example, you go to like the richest people, technically they made their money from like banking, maybe they did like from industry, and what they're expecting either control or like they just want to make sure that it is kind of like a controllable process. So when you are like engaging with African investors, either like on the LP side or the manager side, do you see any kind of like trends, or do you think it's going to take like more time?
Well, one maybe relevant characteristic of this conversation, and of course, investing in private equity is different from venture capital, is different from infrastructure. Early stage is different from later stage. So you have to be very careful, generalizing. But if you talk about investing in technology companies, then there is still a, let's say, over dependency on Western development capital, so the World Bank and the IFC, and then the European Development Agency, which should be catalytic capital, right? It should unlock, local capital. It should unlock commercial capital, and we can have a debate how successful that has been or you can argue it's not been successful just yet, or it's taking more time than needed. So for a GP, if GPs raise a larger fund at some point, unfortunately, it is probably still impossible to raise it without development capital. And I'm eager to hear from Uwem if he sees the same, and from Olamide. So obviously, what you mentioned, of course, the ideal scenario is sort of, founders funding founders, like successful companies and that successful tech companies that exit, where the founders turn around and help the next generation. That is definitely happening. I mean, a great example is InstaDeep, a Tunisian company that was acquired. What was it? Maybe 2 years ago by now, where the founding team, they go around, university campuses, they speak about, technology, they invest in young companies. They do exactly what you want to do. We need 10 more, 100 more, 1,000 more of those, right? So yes, it's happening, but not yet at the speed and the depth that you would like to see.
Thank you. I mean, I will come to that, but maybe I will
I just wanted
also.
to, can I
Yeah,
can I quickly add
yeah,
something what David
yeah.
said around, and that is why we need to figure out liquidity, because at that period, that 2021, 2022, 2023, where there was so much cash, people were doing secondaries. Guess what happened? They weren't, well, some of them did, but they didn't take their money to their villages to build mansions. They actually reinvested in younger founders. And that was a pattern that was beautiful. And that's how ecosystems are built. So we need more of opportunities for the founders so they can exit. And I understand that it's a whole ecosystem and a whole value chain that we need to build out so that these founders can then reinvest in the next generation of founders coming before them.
Yeah, for sure. And like maybe about this like founder to founder interaction, maybe Olamide, I mean, obviously you've been a seasoned investor yourself, but also in a startup ecosystem, you generally have more stakeholders, right? Like you have your mentors, your like buyers in the market, like the big corporate. So if you are looking for like African ecosystem, where do you see this kind of like relationships? Where do we have missing? Because I've seen like few of the people like also mentioning about like they need like more mentors on like MVP stages and like maybe infrastructural programs. But what is your take on that?
Can you rephrase the question a little bit?
What I'm saying is like an ecosystem is not just the money and the
Yeah.
founder. Still, you
Yeah.
have your like mentors, your corporate partners or universities. Since
Mhm.
you guys are also building this kind of the ecosystem, where do you see the strong sides of like Africa and maybe where we are lacking? Because some of those things that we do lack today, it takes time, as
Yeah.
also David
Yeah.
mentioned, like, or Uwem, because you need to build it, then they need to be successful. It takes a 10-year cycle, for example.
Yeah, no, 100%. Okay. So the main thing I am seeing is that those that are most successful in the ecosystem in Africa are those that understand, are on ground and understanding the market around them. One thing I'm definitely seeing is that people who invest in each of these markets are building the ecosystem and infrastructure first. And so what that means is just understanding it's not the same as the Western world. You have to think about in each country is completely different. And you have to think about how are you going to build the infrastructure to allow this SaaS product or this technology to exist. You can't just bring it out. What makes Africa so sexy is that the opportunity to leapfrog is there. You don't have these ancient, archaic industries like the archaic UK financial system or the US financial system. So you don't have the bureaucracy there when you are selling into corporates. But it does mean that sometimes you have to do things like educating people, hand holding, considering the customer services, etc. And that also means that you need one, mentors that are on ground that completely understand the market that you are trying to enter, whether that is one of the big four, whether it's Francophone Africa, understanding the culture, understanding how customers will adopt your product, etc. And just understanding that it's a market of trust. It's not enough just to have an office in these areas. You really need somebody who has credibility there, has the connections, and can really be the face for your company. And so what I see is a lot of people ensuring that they do have those individuals, whether it's government individuals or people who are big in the industries that they are.
Yeah. I mean, maybe it's a good question to ask as well, like just for other people to understand that a bit more. There is a book called Culture Map. I think she became quite famous because she wrote the book about Netflix, Erin Myers. So they talk about like different cultural attitude for different businesses. And this is something that we always come up to because we run, I think like we have maybe 60 different nationalities in our portfolio. And then you have a Swiss guy, and then you have a Turkish guy, and then you have like, I don't know, like Singapore or Korean. Then every relationship is a little bit different. So you mentioned like it's not about like having an office there. Um, how do you see like business making in Africa? Is it like more people driven, relationship driven? Because I think for a Turkish person, I would definitely say that you need to establish a trusting relationship, then they will trust you. It's not about the service first.
1000% it's definitely people driven. And the main reason is because trust is something that is tangible.
Yeah.
If you have, one thing I'm noticing is actually that a lot of startups fail because they focus on UI or technical products and how elite is my product in comparison to, is my product something that people see and they trust? Do I have customer trust? The reason people want to see that is because they want to be able to basically point at someone if there's a mistake. Know who's responsible for this is if it doesn't go through. And so trust in these markets are the most important thing.
Yeah. David?
Okay, David wants to say something. Let's say something. David, go on, please.
No, I find it always a very fascinating conversation about sort of high trust, low trust environments. And obviously I fully agree that, anything is a people business, is a people business. But the sort of, to be devil's advocate a little bit. So I think, most African markets are very sort of fragmented markets. But if you look at, disruptive companies like, Uber, like Airbnb, like Booking.com, they've been able to disrupt markets that were completely fragmented, where technology was actually an enabler and allowed you to do this. I will get into a Uber in Lagos without thinking twice, right? And I mean, it's like, I will. So in other words, yes, it's high, it's a people business, but technology has enabled us to do things globally, but also across Africa, which I think is fascinating.
Yeah, I mean, compared to like 20, 30 years ago, it's incredible, right? Like with technology, you can definitely crack a market like quite segmented. Yeah, I'm with you. Uwem?
Yeah, I just wanted to bring everything together and say absolutely I agree with two of them. But and this is Olamide and David. But I also see how it plays out across the continent. Again, Africa is 54 countries, 54 different cultures. Some of us love ourselves, some of us not so much, but we still do business with each other. And the reality is how it plays out is quite different. A Nigerian will go straight to the point. I want to do this. I want to close this deal. An Egyptian, I'm in Cairo, by the way, he's going to talk about his family, his child, his everything. And if you don't understand the cultural nuance, you're going to be lost or you're going to be too aggressive and you'll miss out on the deal. So understanding how culture plays out across continents is very, very, very important. And so you cannot necessarily take, that human relationship and that people out of that. However, also realizing how business is done is also very important. In some climes, even if you have the best pitch, you have the best experience, you built, relationship and all, if you don't have a connection or a relationship with the decision maker at the top, maybe the CEO, that they will never go through. It doesn't matter how technical your product is, how great it is, how the CTO, raves about it. The buying is not from the top, it doesn't work. So understanding how business is also done in those markets is also very, very important.
Yeah. I mean, I hope that we also have some kind of credibility between us because I want to go a little bit out of the route. So it might be a tough question. That's why after asking this question, I will go and ask something to our audience as well. So what I'm going to ask you, like, if you are a founder today, I know like most of us being different sides of the table, which market you would target and what kind of a business and why? Like in terms of like the market. You tell me. I mean, there is no wrong answers, obviously, because we are all biased. We know different stuff. But if you're a founder today, what kind of a business you would do in Africa in particular? So I will give you just a little bit time. I also see like people writing like insurtech, fintech on the chat, but also to our audience, like, hey guys, what are you guys are doing? Are you like founders? Are you investors? Are you planning to be founders? So if you can write me, so I can also a little bit understand what kind of topics we should discuss. So who wants to go first? If you're a founder today, what would you like to do in which market and why?
I don't mind going first. I'll go really
Yeah.
quickly. I think I would potentially work on an embedded finance product
Uh-huh.
in Nigeria. The main reason I think Nigeria is because it's extremely fragmented, it's messy, and if you get it right there, I think it may be easier to go elsewhere in comparison to working in an easier market. I would only do that if I have a lot of mentors around me and capital.
Yeah, I mean, thanks for adding like mentor and capital part. I think I was thinking about like adding just a little bit more. I mean, maybe for Uwem and David, the same question, but you can say like what would be the biggest blocker? Like what would you need also to do that? Like as Olamide mentioned. Do you guys have any?
Mm. Well, for
Is it
me,
harder than
those.
writing check? I'm
Oh
just
no, no,
kidding.
it's in line with some of. So I did a prediction. So Tech Cabal, one of Africa's most, what I say, popular or most well-read tech blog, reached out towards the end of last year, and we did some sort of prediction thing with a couple of VCs. And part of my prediction was that there's going to be an increase in cybersecurity risks, given that AI tools are becoming so good and so smart. I was actually with an insurtech founder, and he was showing me an image that was generated for KYC, and it was AI generated, and it missed all the flag. It fooled everyone, but we knew it was AI generated. So, anyways, to my point, I will build something around cybersecurity or reg tech, anything that's to do with compliance, and I'll do it. I'll do it more in North Africa, so maybe in Morocco, because Morocco is somewhat at the cusp of being great. I don't know how to describe this. They hosted the Nations Cup. The World Cup is coming. There's a sort of digitization drive. Um, there is so much activity geared towards positioning them as a gateway to Spain and France. And so Morocco is such an ideal market. Egypt, because it's an entrance or the exit to the MENA region. And there is a digitization mandate right now. Lots of people, but not too many people to actually solve the problem. What else? If I'm thinking about an exit, because I'm always thinking about that. And if I'm using my fund as a template, for us, we need to start exiting, or we need to completely exit in 4 to 5 years. So I think that in cybersecurity and reg tech and compliance, there might be some exit down the line to a corporate, because it is going to be a big problem. If you look across the continent, a lot of people don't have IDs. The IDs are outdated. That's why the elections sometimes are just a mess, because people you can't even identify who is who. So there is a lot of opportunities here, and with AI, it's just something. It's just an opportunity for the opportunities there for the taking.
Yeah. I mean,
Can I just also add that Francophone Africa is increasingly somewhere that investors are focusing on? So I second Newman's point that I would definitely look at Morocco and then go into Francophone Africa as well.
yeah. Perfect. And David.
Yeah, no. So I'll take the conversation and somewhere else. But let me start. Give me a moment to introduce it. So I spent a lot of time on the continent, lived in different parts of Africa, did a lot of work on the ground. But a lot of discussions, especially also in the West, are about, yes, investing in Africa. It's always investing in very, basic needs. It's about food security. It's about safety. It's about health. It's about education. It all makes sense. And then an African friend said to me, David, listen, so, we shouldn't invest in entertainment. We shouldn't invest in a music streaming. And I'm like, oh my God, yes. So if I would invest, this is completely outside of my wheelhouse. All my private investments are in, B2B, fintech, it's the stuff that, but I mean, I would invest in the entertainment sector because a lot of things that we invest in across Africa are maybe getting it up to a level or making something that already exists, making it better or seamless or flawless or, but I think that really in the entertainment space, the world is a blank canvas, right? You don't know what's gonna be the hit next year, and it's as much Africa's game to win or to lose as anyone else's. So it's also where the money is, right? I mean, it's like, this is again not something I ever looked at seriously, not something I had any experience in, but yeah, if I was a betting man, I could see that the entertainment business, that's super interesting.
Shameless plug here. I actually wrote an article, I think last week Friday, around the creative space, and I mean the title was Afrobeats Won the World and Who Owns the Win, and I kind of was trying to touch on that infrastructure part that nobody is investing in, and we're allowing Western organizations to actually own IPs and all the like. So I agree with David. The creative sector is something that most people haven't really hacked because we don't even, I think for most people we haven't figured out how to make it a sustainable business because a lot of work has to actually go into formalizing it. But yeah, that's something that it's an opportunity waiting for the taking.
I mean, I'm going to argue, but I'm very biased here because I am Nigerian, that the financial sector in Nigeria definitely sponsors the entertainment sector in Nigeria, right, Uwem? So I'm not sure if it's something that they do across the continent, but I think it's something that is really interesting.
Well, yes, but I think that is not enough because we haven't figured out we haven't built out the infrastructure for entertainment. It is more than music streams because in reality, going back to the creative sector, if you compare the earnings of creatives in Africa compared to, say, the US, it is 0.00000 compared we earn the least. So when you look at the value chain, it's about the music venues, it's about the merch, it's about the infrastructure in terms of the streaming platforms. It's about the studios. There's so much that hasn't been done to formalize it, and I think that's an opportunity for whoever is interested in it.
Yeah. No, I mean, like, I think the opportunity around like Africa entertainment is big because like definitely Africa beats changed the world. Like there are so many hits, there are so many things that are being used like culturally. It's beautiful. Like I think that the influence is going to grow definitely moving forward. I mean, we are coming to the last 15 minutes of our like session, and Eda is also back with us. So I'm looking forward for the other questions, but maybe one thing, Aliana, I think, yes, ask, like, in African markets, which forms of catalytic capital or other de-risking instruments can VCs use effectively to mobilize private capital? I'm understanding, I don't know if you understand this question much better than I do, but what I'm kind of understanding is when VCs are investing, is there other ways of forms of like capital formats so that private investors can also put their monies in, like how we can attract like more outside capital to the VC co-investments?
Maybe I can take the question. So usually like government bodies can either invest directly, so they can have a fund of fund, they can invest, they can support, they can back VC funds or invest, do direct investment to companies, or they support indirectly, which could be, tax benefits or other ways, right? So there's definitely not enough of this happening just yet. If I look at the program I'm involved with, so this is the program of the European Investment Bank, it's a fund of fund investing African VC funds. There, it is very much focused on being catalytic and effectively lowering the risk for other investors. And then you can think of, there's something called the first loss principle. So the EIB takes a first hit. If there's a loss, there's a more junior role you can play on a cap table. So if there's profit to be made, the profit goes first to investor A, B, C, D, and there's something left, there's something from me. So being sort of a public institution, the intention is very much to be catalytic. So in this case, it is catalytic to other investors that invest in VC funds. That is maybe different from the question in terms of if you're a founder on the ground. But maybe as an example.
And maybe like something like similar to the UK structure for EIS or SEIS, like which is like the form of tax reduction and like some risk taken by the government. So some countries are trying to do it, but it's not obviously like the catalytic investment format. But
but the focus of all these programs is usually again for accredited investors.
yes.
But if you look at, we're not going to have that many accredited investors on the continent. However, we have a diaspora that really loves the continent and are willing to invest. So what regulations are we putting in place? Either if, maybe a crowdfunding regulation. In the US, you have a Reg A+ that allows, private companies raise money from private individuals. What are we putting in place? Again, I'm asking as a question, not necessarily an answer, to ensure that the diaspora is actively participating in investing on the continent.
Yeah. I mean, I don't know, Olamide, if you have anything else to add to this, but maybe just for the crowdfunding part, I think it's more than the money, and seeing that support from the diaspora also encourages founders. So that part of the crowdfunding investment was kind of like big yes to me. Sorry, yes, Olamide.
I actually don't have anything to add. I was really thinking deeply about what Uwem just said. We have had a lot of crowdfunding, small platforms come out in the diaspora over the last few years, but none of them have really stuck. And there's a question as to why that is happening. It's a deeper philosophical question on why the diaspora is even getting involved in African investments. And the capital that they actually have to invest in African companies as well. So it's a deeper question. It's a longer conversation, but you're right. It's a question we should be asking ourselves. What are we doing to build this?
Yeah. Maybe I can also ask you, like, I do like it a little bit more because what would you think like a bad Western business advice to work on like African businesses? Because like this is what we discussed, right? Like San Francisco, the playbook of like being an entrepreneur and stuff. Obviously, we have a lot of like hustle culture and everything. Do you have anything that you kind of like hear? Because I'm assuming that a lot of global companies, investors are also like coming to the market, to the continent, maybe like without proper cultural fit. And then maybe trying to do something not super suitable for the Africa founders.
I'm going to start with this one because this is actually advice that I hate globally. Is move fast and break things. I hate that advice. Even in the UK, even in America, it's like what? Stop altogether. As we mentioned before, trust is the most important thing in Africa. And once you're dealing with people, you can't break trust with people. You're never going to get it back. And so moving fast and breaking things, yes, you should try your best to move as fast as possible, but don't be so careless that you feel comfortable to break things just in order to learn quickly because it's not going to work. You're going to shut yourself out of markets and countries. That's my thoughts.
And David,
the point has been made before that it's 54 very diverse markets, and it's very tricky to, take the devaluation of the Nigerian naira and think that applies to everyone, or see the political risk in Mali and etc. So it is definitely you need to spend time on the ground. You cannot invest remote. You cannot do business remote. Local partners is key. Doing your homework is key. So you need to be, you need to take it serious and do your homework. And not doing so would be naive, if you think.
Well,
Okay. So what I'm going to do is share stuff from our strategy session. So anything I see is stuff that we are literally looking out for and implementing as Launch Africa. First of all, founder quality. While we say we're investing in the founder, to be honest, because we invest very early. You can pivot a bad business. You can pivot a terrible founder. So to us, do you have all the traits that is necessary to be resilient and build within the space? Do you know more than everybody in that sector? Like, I want to have a conversation with you and be like, wow, I never knew this. Because again, I tell founders that the goal of a pitch is not necessarily to get that check immediately, is to generate enough curiosity and interest for the next conversation. So founder quality for us and the team. How are you stacking your team? Or what is your vision for the team? Are you trying to replicate the team as, I see early stage founders trying to stack the team, people like them, instead of, finding people that fit or plug the gaps for them. So, team, and because team ties into governance and all those things, so it's very, very important to us. What is the exit landscape looking like? What is, for us, the exit realism is important. If we invest in this founder, given the timeline of our present fund, can we exit this? Or is this a long-term play? Now, this is not saying the business is bad. It's just that it doesn't fit us at the moment. Who are the acquirers in this place? Can we start building those relationships that will put this founder or the business in front of those acquirers over a period of time? What is the architecture around scalability, in the sense that we are big on, be hyper local, but start thinking scale very early. You have to understand your market again better than everybody. I don't want to talk to a founder and I'm hearing, oh, well, I'm in Nigeria, but I want to go to Ghana, I want to go to Kenya. What is the strategy for that? Are you even a winner in your market before you start thinking of expanding? And to David's point, FX resilience. We know that we are in a crazy time in the world. Nigeria, the Egyptian pound, we saw devaluation wreak havoc on that currency. But even with 30 to 50% devaluation, some businesses were still very profitable and growing, Are you thinking about that? How does devaluation affect your business? I mentioned unit economics previously. What is your path to profitability? Even though at the early stage, your business, your financial model is all dreams in the skies, we just want to know that you're putting some thought into it. We want to, be able to map out what's a path to profitability and what are all the other things that need to be in place to get you to that profitability. And the final thing for us is market timing. I mean, I've seen so many. I understand that the work of a VC is to take risk where nobody's, taking that risk. All well and good, but we have to be very realistic in African VC. Is the timing right? It might be great, it might be amazing, but the timing is not just right for the fund or for the investors that you are speaking to. And so you have to always ask, why now? Why should we be investing now? Why should we be building this now? And would you be able to grow, be able to close the kind of customers you're looking for? It's not about feel good. It's about if there are customers that are willing and able to pay for your business and you can scale that business appropriately.
Perfect. I was just looking a lot of questions. I mean, to be honest, thanks for everyone in the audience. This chat is on fire. People are talking to each other, sending great stuff. I don't think that we will have enough time to answer all the questions, but maybe one of the easy questions, Diren asked is there a preference for startups to be domiciled in the US or Europe, but with the product business activities in fully engaged on the continent? How do you see this? Because for us in Turkey, we used to have a lot of Delaware companies setups or London setups, but the business is done. So is this a plus or minus? How does it seem?
Can I answer that? Because that's a reality that we oftentimes lead. So for most VCs on the continent who raise capital from LPs in the West, outside the continent, they oftentimes want you to domicile your business, the holdco, in an investor-friendly jurisdiction where there are no dual taxation laws, where it is easy to repatriate their money easily. And so that's why they oftentimes advise you that the holdco that owns the IP and all the operational branches on the continent should be in, investor-friendly places. Singapore, UAE now, Dubai, London, the US, Delaware, now Texas. So just anywhere that the LPs are very Mauritius. Thank you very, very much. Mauritius is on the continent because we are actually domiciled in Mauritius. I don't know why I didn't mention it first. So yeah, that is the logic behind that advice. So people say, you have to have that whole code registered in a friendly jurisdictions for the investors.
I mean, I think what we are going to do is like probably just a second. There are like more questions coming in. I just saw my name, so like I'm a human. So whenever somebody says your name, you are distracted. What I think it's going to be a good idea to keep this maybe in like LinkedIn, just to post this and with the questions. I think we published like your LinkedIn account a few times. So if they want to connect with you, I would be super happy to make sure that this happens. And maybe we can have a follow-up discussion later on. For everybody's name, I'm really happy that you guys joined us. I really enjoyed the discussion and thanks for your time. Would you like to say any final words before we leave our stuff? Maybe before you guys also like I leave you to it, we have a QR code. This is just basically our like ecosystem thing. So if anyone wants to go in and subscribe to the mail list and become like a Tenity partnerships, that would be good. But I would be happy if you guys uh, have the final remarks and we can close this session. Should we start with Olamide?
Yeah,
Yes.
thank you so much. This was such an interesting conversation, and hopefully we can continue it. I really enjoyed it.
Thank you very much, Olamide. David?
No, thank you as well. I think it's good to acknowledge that absolutely amazing things have happened the past 10 years. And I just want to say that I have the pleasure of working with some of the most fun, intelligent, inspiring people, both on the founder side and on the funder side. And I pride myself of being part of this sort of greater family. And it's an exciting time. It's an exciting time to be in tech. It's an exciting time to be in Africa. So yeah, thanks a lot.
Thanks for being with us, David. Uwem?
Yeah, exciting times, like David had said. But I'm just going to put my closing statement in line with one of the questions that was asked in the comment section that talked about scalability. And I think that people oftentimes mistake scalability and scalability and stability. Yes, the continent has a lot of unstable economies and currencies. But within those markets, give an example in Nigeria, MoneyPoint is processing about 22 plus billion, right? In a market that has an unstable currency, but they're scaling their businesses appropriately. So there would always be problems and there will always be reasons not to do business on the continent. However, there are opportunities, and oftentimes great investors oftentimes ignore all the challenges, not necessarily ignore, but say, okay, yeah, these challenges exist, but these are the solutions that I'm going to be able to solve for it. So don't let all the challenges that you hear discourage you from building on the continent. And I always say Africa has a storytelling problem. We always amplify the negatives and don't talk enough about the positives. So much great things happen on the continent, and I want to believe that everybody on this call is going to be part of the positive story.
I mean, as Tenity, we haven't been quite active in Africa. Personally, I do have like my friends in London, and we are trying to do it like on that level. But obviously, we see a huge change and great people because at the end of the day, as David said, like I'm super happy to engage with like early stage founders which are building great stuff, and if we can support them, I'm personally quite happy anyways. So thank you very much for joining us. And hopefully we will follow this session up in a way or form, maybe in a physical event at maybe Opus. We will see that. Let's see. And thank you everyone who also joined us and listened to our like conversation. Hopefully you will get something out of it. And Eda, thank you very much for everything in terms of the planning. Yeah.
Yes, thank you
Until
so
next
much,
time.
everyone. Looking at the questions, I think we should definitely do second version of the Africa webinar, either in person or online. So we will keep in touch. Thanks for joining. We
Have
will
a great
share the
day.
recording as well. Bye
Thanks
now.
everyone. Enjoy. Thank you so much. Take care.